Another merger has been announced within the gold mining space. And well, investors are quite unhappy. Calibre Mining is set to be taken out by Equinox Gold, but not for a premium. In fact, it's not even at market. It was at a slight discount to the closing price of Calibre on the day prior to the announcement, which quite frankly is an oddity in the capital markets, especially for a company that is valued in the billions. All right, guys, let's dive in. Calibre Mining is set to be taken out by Equinox Gold to create what is expected to become the newest Americas-focused major producer within the gold sector. Once two cornerstone projects are complete, the company is set to become the second largest gold producer in Canada. Despite this, Calibre is to be acquired in a transaction described by the two parties as an at-market business combination, which in reality means the Calibre shareholders would have been better off selling out of their positions the day before the transaction was announced. Under the terms of the deal, Calibre shareholders will receive 0.31 shares of Equinox for every share they held, which equates to $3 per share based on the closing price of the equities on February 21st, the last trading day before the deal was announced. The problem, however, is that Calibre closed at $3.09 on the 21st, meaning that Equinox is actually acquiring Calibre for a slight discount, rather than the industry norm of a premium. The deal values Calibre at about $2.6 billion Canadian, with shareholders set to own about 35% of Equinox on a post-transaction basis. The combined entity is expected to be valued at about $7.7 billion, based on the transaction price. But given the fact that both equities have fallen on the news, well, that combined valuation might be a little less once the dust settles. And while shareholders seem to be getting the short end of the stick, management looks to be doing quite well here. The transaction will see Calibre CEO become the COO and president of the combined entity, while Equinox will expand their board to 10 directors, so that 4 of 11 of Calibre's directors can continue to collect a routine paycheck. Better yet, management seems heavily focused on getting the transaction closed, with massive termination fees in place in an effort to force it to move forward. Equinox is liable for a US $145 million termination fee if they elect to walk away, while Calibre is subjected to an $85 million termination fee. Oh, and Calibre has agreed to conduct an irrevocable $75 million convertible note financing with Equinox and two funds, which is convertible at a price of $4.25 a share. The notes bear interest at 5.5% and are valid for 5 years. So what's the draw for the combination? The justification for the transaction appears to be largely the premise of building the next gold major. On a combined basis, the two entities are expected to produce about 1.2 million ounces of gold next year, which places the company above the mark in terms of being classified as a major. For 2025, production is estimated to be about 950,000 ounces on a combined basis. Prior to the merger announcement, Equinox had guided to production of 635 to 750,000 ounces, while Calibre had guided to between 230 and 280,000 ounces. Combined, that range is between 865 to 1.03 million ounces, with 950,000 ounces around the midpoint. And while the production profile may not be that huge right now for Calibre, the company is in the process of constructing their Valentine mine, which once at full capacity is expected to produce 195,000 ounces of gold a year over a 12-year mine life. That mine is expected to come online next year. Equinox, meanwhile, just had their own cornerstone asset hit commercial production in November of 2024, with the Greenstone gold mine expected to produce 330,000 ounces of gold annually over a 15-year mine life. Much of that production is front-loaded, with Greenstone slated to produce 390,000 ounces a year over the first 5 years of production. On a combined basis, Greenstone and Valentine are expected to produce about 590,000 ounces a year over the next few years, which will make Equinox the second largest gold miner in Canada in terms of local operations. On top of this, the combined entity has pushed the standard talking points for a merger, including substantial free cash flow, an exceptional growth profile, the significant re-rate potential, and an industry-leading team. Because what company doesn't say they have an industry-leading team? In fairness to Equinox, however, they do have quite a strong team as it stands, and will continue to have a strong team post-merger. The company is chaired by Ross Beatty, who is the founder and chairman of Pan American Silver, the former president of the Silver Institute, a member of the Mining Hall of Fame, amongst several other accolades, and has founded countless other junior names that were eventually sold off, generating wins for investors. With the acquisition of Calibre, Beatty will now be joined on the board of directors with Blaine Johnson, the chair of Calibre and the chairman of Featherstone Capital, as well as Doug Forster, who was the founder and CEO of Newmarket Gold before they were acquired by Kirkland Lake Gold for $1 billion in 2016. All told, Equinox Gold will increase their director count to 10, with Beatty to continuing his role as chairman. Equinox will contribute 5 additional directors, while Calibre will contribute 4, which includes Johnson and Forster. Calibre CEO Darren Hall, meanwhile, will become the COO and president of the new Equinox Gold, where Equinox Gold CEO Greg Hall will continue to serve as CEO of the combined company. All right, so let's wrap it up. This transaction, of course, remains subject to shareholder approval from 2/3 of Calibre shareholders, as well as a simple majority of Equinox shareholders due to share issuances. So far, Calibre has secured approvals from 2.1% of shareholders, which amounts to management's stake in the company, and that figure is shockingly low, especially considering the multiple or lack thereof that they are being acquired for. Equinox has meanwhile secured approvals from 6% of shareholders, which really isn't much either. Both boards have voted in favor of the transaction, however. But whether shareholders will vote in favor remains to be seen. Calibre shareholders aren't exactly pleased with the pricing, despite still being up 32% year to date. But with a cornerstone asset coming online, they were just about to see the benefit of sticking it out, only to get that yanked away from them. Welcome to the mining sector. All right, everybody, thanks for watching. If you enjoyed this video, please smash that like button, subscribe, and ring that notification bell. Also, guys, let me know what you think in the comment section. Thanks for watching, everyone.